I'd like to call to order the meeting of the Insurance Benefits and Ledge Committee for Thursday, April 15th, 2021.
As this meeting is being conducted virtually, I will do a roll call of the trustees to confirm attendance. Mr. Knox,
Here.
Mr. Santos,
Present.
Miss Gray,
Here.
Mr. Bernstein,
Present.
Mr. Oakham,
Excuse me, here.
Mr. Moore,
Here.
Mr. Kehoe,
Present.
Ms. Zapanta, Mr. Pryor,
Here.
Mr. Harris, Chair Robbins.
I'm here.
Staff participating in the meeting includes CEO Santos Kryman, AEO JJ Popowich, Interim Chief Counsel Johanna Fontenot, Legislative Affairs Officer Barry Liu, from Retiree Healthcare, Cassandra Smith, Director, and Kathy Magida, consultants Stephen Murphy, Paul Sadro, Richard Ward, Michael Zito, Amber Turner, Christina De Leon from Siegel. Trustees, if you have a comment or a question on any item, please use the Zoom chat option. At this time, we ask all meeting participants to mute your mics until you are ready to speak, and we may now proceed with the agenda.
First item on the agenda is 1A, approval of the minutes of the regular meeting of March 11th, 2021. I need a motion.
So moved.
Second.
Are there any corrections? Seeing none,
Ms. Gray,
Yes.
Mr. Kehoe,
Aye.
Mr. Oakham,
Aye.
Chair Robbins.
aye.
The motion passes unanimously.
Item 2 is public comment. Is there anyone from the public wishing to address the committee?
I don't have anything at this time.
Thank you very much. We'll go to item 3A, action items, recommendation by Mr. Liu that the committee recommend the Board of Retirement Directors voting delegate to vote yes on sponsorship at the SACR's conference of Senate Bill 634. Is there a motion?
Vivian, good.
Moved.
Second.
Please record your vote.
Ms. Gray,
Yes.
Mr. Kehoe,
Aye.
Mr. Oakham,
Aye.
Chair Robbins.
I'm an aye.
The motion passes unanimously.
I'm now on item B, recommendation by Mr. Liu that the committee recommend the Board of Retirement adopt a support position on HR 82, which would enact the Social Security Fairness Act of 2021. We've got a memo dated April 2nd in the file. This, by the way, is a real moving target from what I understand, but is there a motion?
Yes. So moved.
Second.
Moved and seconded. Does anyone have any questions of Mr. Liu? Are there any latest updates on this, Barry?
Nothing new about this. Representative Davis had introduced this in prior years, and this is in conjunction with Rep. Neal's bill, which I gave the board an update last month, which would reform the web as well as repeal it. But I think our approach has been we could support Rep. Neal's bill while at the same time also supporting a full repeal as well on this.
Anyone have any other questions? Let's go ahead and vote.
Ms. Gray,
Yes.
Mr. Kehoe,
Aye.
Mr. Oakham,
Aye.
Chair Robbins.
I'm an aye.
The motion passes unanimously.
We're now on item C, recommendation by Mr. Liu that the committee recommend the Board of Retirement adopt a support position on Assembly Joint Resolution 9, which would request Congress of the United States to enact President sign legislation that would repeal the windfall elimination government pension offset from the Social Security Act. How about a motion?
So moved.
Second.
I'll second it. Any further discussion on this? Let's take a vote.
Ms. Gray,
Yes.
Mr. Kehoe,
Aye.
Mr. Oakham,
Aye.
Chair Robbins.
Have an eye.
The motion passes unanimously.
We are on item 4A, the engagement report for March 2021. Mr. Liu.
Yes, thank you, Chair Robbins and committee trustees. Just a few items of interest for you. The first involves Kentucky. I know in the last few years, we've heard a lot about what's been happening there. But it looks like lately they just approved a hybrid plan for the Kentucky teachers retirement system. Their legislature approved it. It got vetoed by the governor, and then the veto was overridden by the legislature on this. So this was basically establish a new hybrid plan, has defined contribution and defined benefit components to it. And it would also establish a stabilization fund in case that new plan falls under 100% funding. And of course, anytime you have a new plan, you have, I think, more stricter retirement rules. So currently teachers can retire with 27 years of service, but the new plan would require retirement at age 57 with 30 years, or at age 60 with 10 years, or age 65 with 5 years of service. And then the next item involves the pandemic, which has really had a huge effect on our economy and employment, and it basically has forced a lot of workers to retire early, particularly older adults. So what's interesting about this is it also has an effect on when they receive either their pensions or Social Security, because if the earlier you retire, the less you receive. And then in contrast to the previous recession, older Americans tend to be in mid-careers, tend to be the ones most affected by this. And as far as lower income older workers are concerned, they've also been really hit hard by this. And at the same time, those at the lower half of the income scale have lower retirement savings and rely more on Social Security, which, as many of you know, the average benefit is about $1,500, but over 2/3 of people who get Social Security claim it before full retirement age. So again, this would have an adverse effect on the millions of workers that were forced to retire due to the pandemic. And then I think a couple of months ago, I indicated that a lot of teachers in California from CalPERS had retired early. Here's another example of teacher retirements that are happening in Michigan, again, due to COVID and the challenges of teaching during the pandemic. They're also affected by the fact that a lot of teachers there are leaving the profession before they've hit 10 years of service that would qualify them for retirement benefits. And then just a pipeline for getting more people into the teaching profession there, has dropped in terms of people enrolling in prep programs, and also the number of students graduating from teacher colleges. So there's been really an increased use of substitute teachers, and a lot of districts are even competing for substitutes. And then the last item is an interesting one regarding public sector defined contribution plans. A lot of the focus in the public sector has been on defined benefit plans because the public sector is very sort of last bastion for pension plans compared to the private sector. But the public sector also has DC plans. For example, here at LACERA, we have 401k plans as well as a 457B plan. So this is something that comes out of the Public Retirement Research Lab, a database that's created just to take a look at what's happening with DC plans across the public sector. So some interesting numbers here. For example, in terms of account balances, the average account balance is about $96,000, whereas the median account balance is about $32,000. And then in contributions, there's about 3,900 that's contributed annually on average, but the median that's contributed is about 1,300. So the average here is about 3 times larger than a median. So that basically tells us what we kind of expect, that generally people who can afford to save do save, that people who make more money tend to save more. So that kind of skews the average higher compared to the median here. Also, the use of loans tends to peak for those at age 40, and then it drops down to about 3% when they're age 60. But what's interesting is that by the time they're at age 60, the average loan balance as a percentage is about 19%, which is about a fifth of their account balance. So again, if older workers tend to maybe either retire early or leave their jobs due to the pandemic, this can carry some risk, given the fact that if you leave your job with an outstanding loan balance, you need to either pay it off or it becomes deemed a distribution. And then lastly, as far as asset allocation is concerned, people in their 20s tend to use target date funds, whereas those that are approaching their 60s tend to use more stable value funds. So that concludes my report. I'll be happy to answer any questions.
Barry, just some silly question here. $96,000 in a 60-year-old in an account?
Well, this is the average. So they're looking at I think just a lot of plans across the public sector. So a lot of times when you can see a wide disparity in terms of what plans you're talking about, but they're looking at this average in their entire database.
Is this an addition to a DB retirement plan? This is just extra dollars? So there is.
Yes,
Okay.
correct.
Okay, thank you.
I think you're muted, Les.
I got the washing machine going in the background. I keep on turning it off because I don't want to listen to it. So we're on item B, staff activities report. Cassandra.
Sorry, I'm talking too. There was nothing on the staff activity report.
Thank you very much. Item C, the medical dental claims audit findings. I guess Siegel is up.
Thank you. Good afternoon. Hello, I'm Christina DeLeon and I lead Siegel's audit practice. It's a pleasure to meet with you today. We thank you for the opportunity to review the results of the Anthem medical claims and Cigna dental audits with you. Both audits were encompass the 12-month period of July 1st, 2019 through June 30th, 2020. Notably, it is inclusive of an approximate quarter of pandemic activity and corresponding utilization. Amber Turner is the lead audit consultant for LACERA, and she will review the summary findings and recommendations of the dental and medical audit reviews. And I will share my screen. I believe the reports begin on page 85, and I will share on Zoom the documents. Thank you.
Thank you, Christina. Again, I'm Amber Turner. I normally conduct these audits on a yearly basis for LACERA. Through this, again, the audit period was July 1st of 2019 through June 30th of 2020. You could go to page 2. Okay, so page 2, our scope of services hasn't changed. We are doing an adjudications procedures review, which reviews the day-to-day processing guidelines and claims control measures. A random stratified sample of 220 claims that will measure our validity against the financial dollar and incidence accuracy rates. And then we do also a 35 target claim selection, which is handpicked. It's through electronic analysis, and we pick out anything that would be a possible duplicate to any exclusions, any kind of deductible problems, or anything that we see that's out of the ordinary that we need to additionally check into. Christina, if you can go to the next page. Okay, so our results from this, keep in mind, this is not inclusive of the target sample. Statistical findings for your performance review are only from the 220 claims that we sampled randomly. From those 220 claims, one in-sample overpayment of 2627 was identified, 2 in-sample underpayments totaling negative $2.19. And then we have our out of sample. The out of sample is not going to be included inside of your performance guarantee statistical achievements because these are actually claims that we found throughout the patient's history that were wrong, but they weren't sampled claims. Through those, there was 10 out of sample underpayments that amounted to $1,091.76 and one out of sample overpayment for $37 or $37,210.88. And then we also found 9 out of sample procedural errors. So your statistical achievements, it looks like they did actually meet the statistical performance guarantee that LACERA set forth. Keep in mind, that the out of sample and the targets are not included in this. For the financial accuracy, we have 99.89% out of the 99% guarantee. For the payment accuracy, it's 97.89%. You don't have a performance guarantee on that one. The procedural accuracy was 100%. The 97% performance guarantee was met. The overall processing accuracy was 97.89%, and you don't have a performance guarantee on that one. The time to process was 99.29%, and it did meet your performance guarantee of 90%. And the 30-day calendar turnaround time is 99.90%. We want to keep in mind that these are not inclusive of any kind of multiple processing events, meaning that if they adjudicated the claim first and they paid it within that time period, but then they went back and adjusted it, then it wouldn't be on this calculation. So if we can go to the target sample. So like I said previously, we did do a 35 claim target selected sample through electronic analysis. The results of this sampling identified 21 errors in 2 plan intent items. There were 16 in-sample overpayments totaling $13,079.34 and 3 out-of-sample overpayments totaling $4,783 and 2 out-of-sample underpayments for $1,593 and also 2 plan intent items. So if we can go to the key findings and recommendations. Okay, so overpayment recovery efforts, we did ask that Anthem start doing the overpayment recovery efforts for any statistical or target errors that were found within the report. And we did also request that they provide any kind of financial impact reports for claims that we found that either have multiple incidences of being miscalculated, or if they're auto adjudicated, meaning that the system is processing the claim. Normally when they're auto adjudicated, it means that there's a programming issue. So we do look into those. So the following are some of the things that we found. We found that Anthem incorrectly coordinated the Medicare benefit. This was a residual item from last year's audit, and we did find 2 of those. If you can remember back to last year, there was way more than 2. So it seems to have subsided this year. We did ask if they could provide us details, and they said those details will be provided to LACERA. by their account management. The next item is of some concern. Anthem applied their allowed amount instead of Medicare's allowed amount. Normally when they're coordinating with Medicare, they would use Medicare's allowed amount. They did agree to the overpayment, and they're currently working with operations to find out the details on this. And they will be providing LACERA with feedback in regards to what happened there. So then the next item was in regards to over applying the deductible. This didn't have any financial impact because they still would have to meet their out of pocket. And this was due to pharmacy integration. Anthem has since sent that they did put in a new process in order to make this pharmacy integration a little bit smoother so there wouldn't be so many underpayments. And we did ask them to provide additional details in regards to how that's going and how the implementation of that went. They said that they would be providing that information. If we go to the next bullet, that has to do with the same issue, and that was in regards to exceeding the out of pocket. This would have a financial bearing, and it does result in an underpayment because they are over applying and coming out of pocket more than they should. The next item is in regards to the lifetime maximum. We found that there was a member that was overpaid of the lifetime maximum of $1 million. They were $37,184.61 over. They did agree to this during the review, and they noted that it's due to pharmacy integration. We did ask that they provide us with some sort of impact report in regards to how many people are over. And they said that their account management would be doing that and providing it to LACERA. The next item is in regards to hearing aids. We had hearing aids do have a maximum of the $300 allowed amount. We found that there were 6 claims that were over that $300. They agreed to the overpayments. We did ask that they provide a financial impact report. They noted that these were manually adjudicated, meaning human error. But we did note to them, that 1 time is a human error, 2 times is a human error, but when you continually do it, you have to wonder if it's actually, a repetitive error that's going to be happening. They said there was some coaching that was provided, but we still recommend that they, give you guys impact reports in regards to the amount that we're actually talking about. Again, the acupuncture, they have a limit in regards to $30 per visit. We did find that they were going over that $30 limit, and they did agree to that. And again, they did say it's due to human error, due to the multiple incidences that we found. We did request an impact report. They declined to give us that impact report, but we do suggest that LACERA reach out to them and ask them to actually pull that report. There were 2 claims for outpatient surgery that didn't have the pre-certifications. These 2 claims, Anthem actually disagreed with this. They're saying that there's only certain procedures that are performed in an ambulatory surgery center that require pre-certifications. LACERA's actual plan document states that pre-certifications is required for surgeries wherever performed, or a non-certification deductible applies. They said that, they're still maintaining that that's not an error. And we did recommend that LACERA discuss this with Anthem and the intention of the pre-certification for outpatient surgeries. And if Anthem is correct and you guys are in agreement, then we do recommend some type of correction or corrective action to be executed on the summary plan document for more clarification. And then we did find that there were duplicate claim payments, and they are saying that those were due to human error, and they did agree to them. They are requesting direction in regards to if LACERA would like them to adjust the payments on these. So that is a follow-up item. Before I go further with the dental, does anybody have any questions on the medical?
Any questions? Any comments, Cassandra?
Yes, we will be following up with Anthem, requesting those impact studies because it's interesting that we switched over to the mail and the 90-day at retail, and I'm wondering if that was what those pharmacy integrations were results of.
Okay,
Okay, so we can move to the dental. Okay, so the dental, we did the same, basically the same process. We did sample from July 1st of 2019 through June 30th of 2020. We did an adjudications procedures review, and then we did a stratified sample of 225 random claims that were statistical validity claims. Cigna does not allow us to do any targets on this, so we didn't target any claims on this.
Amber, I think just to pause, these audits were unique compared to the prior periods, the 2019 period, 2018 to 2019 period, in that they were conducted remotely due to the pandemic. Did you want to comment on that?
Yeah, they were conducted remotely due to the pandemic, but it was basically the same process. We had system access. We were able to navigate their system remotely. So nothing really changed besides the fact that we weren't on site. We still actually access their system and all the documentation needed in order to review the claims.
actually, I'm kind of pleasantly surprised that in spite of COVID and people working remotely and all of the disruption in the workplaces, that these numbers are as good as they are, just because of how different things have been for the last year.
Yeah, and you know, it is, the numbers are pretty similar to what we've seen previously in the other audits from the other years. So there wasn't a lot of deviation. And everybody's been very cooperative in regards to letting us audit remotely. Normally we have to actually go on site and, you know, handle this, but it seems like the vendors were very proactive in helping us out in that matter. So for this, we didn't find anything wrong with these. It didn't identify any claims adjudication errors. I believe last year there was only one. So this year there wasn't any. If we could go to page 2. So the statistical results, again, we're at 100% for almost everything. The time to process within this one, it's 95.45%, which met the performance guarantee. So the key finding, the key observations on this, due to pandemic, Cigna did allow additional $8 to be billed for personal protective equipment. This is something that they're allowing. The claims submitted during the pandemic in the California stay-at-home order were not investigated for possible fraud. Cigna noted that fraud measures are in place with all their providers, and will provide this additional information. And they did say that there's a special investigation unit that's responsible for investigating suspect claim activity. And they do have a number of edits within their system that does look for this as well. We didn't find anything that was abnormal with the amount of visits, but we did find some claims that were done during that same at home order. So we were curious about that. Cigna did note that during the pandemic, a month of premiums were refunded back to LACERA, and this information was previously communicated to LACERA. So does anybody have any questions in regards to the dental?
Questions, anybody? I don't have any, so. Cassandra, any comments from you at this point again?
I have nothing. Thank you, Amber and Christina.
Thank you so much.
Thank you.
Thank you, your usual good job.
Thank you.
We'll now move to claims experience. We got Stephen on.
Paul, I believe, will be doing it today.
Okay. So yours, Paul.
So, all right, so we're going over the experience dashboard. This first slide shows premium and enrollment. We saw a drop in the medical monthly premium, which was consistent with a drop in the retiree count. The same was true to a lesser extent for dental. We can proceed to slide 2. The addition of August through November 2020 experience for Kaiser resulted in an increase in the per capita cost by about $30. That was the major change that we saw, that we're seeing in this report or on this slide. There also was a large claim in the Cigna experience that resulted in an increase of about $60 per capita, and Anthem decreased slightly by about $10. We can proceed to the next slide. This is a breakdown of the Anthem claims, very similar to last report. Anthem plans 1, 2, and 3 showed a decrease on a per capita basis. The result was an overall decrease of about $7. We can proceed to the next slide. And so Kaiser's experience was updated for August through November 2020. The changes on a rolling 12-month basis are consistent with the prior report. We're seeing outpatient and inpatient claims decreasing and pharmacy claims increasing. This is consistent with the effects that we see from COVID restrictions, etc. One of the irregularities here is that we are seeing an increase in the inpatient days per 1,000. And that was due to an increase in mental health claims. So we can proceed to the next slide. And this slide shows the high cost claimants. The additional experience for Kaiser resulted in an increase of $10 on a per capita basis for high cost claimants. Cigna, as mentioned before, had a large claim this month, which resulted in an increase of about $40 on a per capita basis in high cost claims. And Anthem stayed the same relative to the last report. And we added the fourth quarter rebates to this report, which resulted in an increase of $10 on the per capita rebates for the most recent 12 months, which is calendar year 2020. And we can proceed to the final slide. So the addition of February 2021 resulted in the entire most recent 12 months of experience being impacted by COVID. As a result of that, we're seeing more of a decrease on a rolling 12-month basis. So we're seeing a drop of 25% for dental and of 19% for vision. The proportions in and out of network remain unaffected. So that this concludes the experience dashboard. If there are any questions, we can address them now.
With respect to page 7, is any of that surprising to you, or is that what you expect, or that's what you've been seeing with other clients?
Yeah, this is what we would expect. We're looking at 12 months that are completely affected by COVID, which for dental and vision, of course, means lower utilization versus the prior 12 months, which had no effects of COVID. Vision and dental are expected to see some increases now that, restrictions are no longer in place and there is some pent-up demand, but we're not seeing those come in as quickly as we had thought. Keeping in mind that when we do add February 2021 to the most recent 12 months of experience, we are taking out February 2020. So it's yet to be seen whether or not that pent-up demand really kicks in and we start seeing the rolling 12 months pretty much, move in the direction of being more equal over time.
Does anyone else have any questions, comments? If you do, speak up. Thank you, Paul. Federal legislation, any exciting developments there?
Hi, good morning.
Right.
This is Richard Ward with Siegel, and the main item that we're watching is the rebate rule, which affects how pharmacy rebates are applied in Medicare plans. That was slated to go into effect for 2022, but I think has been discussed in a previous meeting or been noted. The Biden administration has delayed the implementation for at least a year. So that won't affect Medicare plans such as LACERA's, the Part D plans next year, but we're watching and monitoring what the federal government may change in that regarding that rule and how that might affect LACERA.
Okay. Anything else?
No, not for this month. Thank you.
All right. Any comments to add there, Cassandra, from your end?
I have nothing. We'll continue to monitor, as Richard said, because this would have an impact on our premiums because we use those rebates to help offset those premiums. So
We are now on item 5, items for staff review. Anything there?
I have nothing to report.
Thank you, Terry.
Sure.
Go to the order. Vivian, you want to go first?
Thank you. I have no comment. Thank you for the work everyone has done on their reports, particularly Mr. Siegel and also Mr. Liu. Thank you so much.
Mr. Moore.
No, I have nothing to add.
Mr. Oakham.
I have nothing to add.
I'm just going to open it up.
Good
Anybody have
report.
anything to add?
Nope, great info.
Nope, nothing.
Okay, well, with that, we have come to the end of the committee meeting, so I'll accept a motion to adjourn.
So moved.
We are adjourned. Thank you all.
Thank
Thank
you.
you.